Welcome to the Traveling Thief, where future high flyers get inspired to travel the world and secure success.
You've seen it in the news. It's that cold, dampness in the air. Yes. A storm is coming. And not just any storm, but a big one. It's forecasted to be above average, capable of tearing roofs and uprooting small trees. The rains it brings are torrential. Classes suspensions initiated and evacuations are happening as we speak. But don't worry, because your house and family are safe. You have enough supply of food, clean water, backup energy, medicine, and emergency supplies. Even your pets are safe and secure with you inside your home. You and your family will weather this big storm just fine. But what about your finances? How confident are you that it can survive this looming disaster?
If you find value in what we do or like the content that we share, hit follow and subscribe to update you every time with the new video. We hope to help and educate people around the world. Now back to our episode.
So here are the common financial problems and how you can avoid them. Number 1. Check all your accounts, bills, and investments if they are heading to collection status. In the event of an evacuation, or if your telephone, water, internet, and electricity are not working, people may not be able to call, text, or email you. If a creditor or service provider cannot contact you, they may send any debts and unpaid bills you owe to the collection agency. This is bad. Getting sent to collections will not only incur penalty fees, surcharges, and service disconnections. It also impacts your finances, credit reports, and scores negatively. This means you will have a hard time getting a loan, claiming a government benefit, or buying the house you like in the future. To avoid this, days before the storm reaches your area, set up a backup forwarding address to a trusted relative's place or to your office address that is outside the expected path of disaster. Update your information with each of your creditors, service providers, loans, and financial institutions. This way, they can contact you before problems begin. Number 2. Thinking that requesting a loan suspension from your lender, financial institution, or service provider automatically adds the payments at the end of the loan. Big mistake. This only causes the payments to become suddenly due and you scratch your head about what happened. Lenders or loan servicers will sometimes allow borrowers to defer payments for a few months, and then expect the entire amount to be repaid immediately afterward. Depending upon the type of loan you have, your lender or loan servicer may be willing to temporarily reduce or suspend your payments. This is called forbearance. Here is what you should do. If your lender or loan servicer offers you a deferral, forbearance, moratorium, or loan modification, carefully study the terms of the offer. Once you have an agreement or understanding, be sure to document everything that was discussed. If you can't pay your mortgage or are worried about missing a mortgage payment, call your lender or loan servicer right away. Ask if they are willing to work with you on a repayment plan. Number 3. Not fully knowing and understanding their financial company's disaster relief policies. Understanding the situation, many companies have special disaster relief policies. It's important to know how these policies work so you don't miss out on disaster assistance, or misunderstand how much money you owe and when. Here is what you should do. Ask the company for written copies of any special disaster policies. Review them carefully to see how they apply to your situation. These counselors are specially trained to help you assess your financial situation, evaluate options if you are having trouble paying your mortgage loan, and make a plan to get you to help with your mortgage. Number 4. Hiring contractors very soon after a disaster to fix your home, without checking first if your insurance check is not held by your bank mortgage. Some people had trouble paying contractors they had hired because their insurance check was being held by their bank or mortgage servicer. Many people hire contractors soon after a disaster to quickly begin repairs on their homes or business. Some mortgage agreements require any insurance checks to be made out to both you and the mortgage company or servicer. This may affect your ability to cash insurance checks, as that company may need to approve them before you can cash the insurance check. Typically, your mortgage company or servicer will agree to release a portion of the settlement money before work begins so you can hire a contractor. So before hiring a contractor to begin repairs, check with your insurance company and your mortgage company or servicer about how and when the insurance funds will be distributed. Number 5. Not checking with your insurance company and car lender what type of policy you have, before a disaster strikes. Some people found that they still owed money on their auto loans even after their car was declared a total loss by their insurance company. When your vehicle is damaged, your insurance company assesses the value of your vehicle based on age, model, and other factors. Damage to your vehicle does not eliminate your responsibility to make your auto loan payments. When the cost of repairs is more than the value of the car, the insurance company may declare the vehicle a total loss. If the amount you owe on your auto loan is more than the insurance paid on your totaled car, you may owe the difference to the lender. This situation is sometimes called negative equity. Sometimes, people have a type of vehicle insurance called guaranteed auto protection insurance, which covers the difference between the amount due on the auto loan and the amount paid by insurance. Here is what you should do. Clarify with your insurance company and your auto loan lender what type of insurance policy you have as well as what losses the insurance will cover and what you will still owe. After the insurance process is completed, if you owe more on the loan than the amount paid by insurance, you will owe that amount. If the amount of your insurance coverage is more than what you owe, then you will get paid the difference. In working with your lender and insurance, things can get confusing. Write down the names of the people you speak with and ask if there is a case number associated with your account that you can refer back to. Once you have come to an agreement or understanding, be sure to document everything that was discussed. Number 6. Not calling your bank and lenders to stop automatic payments, before a disaster happens. After a disaster, electrical blackouts and flooding can make it hard to send payments on time or stop automatic payments. This can lead to overdraft fees. Here is what you should do. Make it a priority to contact your bank or lenders quickly if you need to stop automatic payments or if you will miss a payment due to the disaster. Explain the situation that caused the late payments and ask for a waiver of any late fees. Also, get in the habit of making a monthly budget. That way, you'll know what charges to anticipate. Number 7. Not checking the disaster aid your government and private organizations give to small businesses. Some business organizations make loans for help after a disaster. Check if there may be grants available through their emergency programs. Grants do not have to be repaid. If you received a loan, it must be repaid or the accounts may be sent to collections, and that could negatively affect your credit. Here is what you should do. Check your paperwork, and if you are still unsure, contact your government or business organization to see if you can apply for a loan or a grant. If your loan was sent to a debt collector and you are having trouble repaying it, you may also want to try and negotiate a settlement with the debt collector. And finally, number 8. Getting scammed after a disaster. Fraud is common after disasters. Scammers will offer to get you a loan modification or do home repairs for an upfront payment. Sometimes, a scammer will even pose as someone from your insurance agency, your bank, or as a government employee. Here is what you should do. Learn to recognize the signs of a scam. If you need a loan modification on your mortgage, contact your mortgage lender or servicer directly rather than going through a third party. You can also check with your state licensing agency to confirm the business is legitimate. If you suspect a scam, contact your local authorities. Being in a disaster is a horrible experience for anyone. Being alive and staying safe while the disaster strikes your home is only the first step. Truly surviving a disaster entails having your finances, savings and investments survive the aftermath of expenses, and its destruction left behind. These are only a few basic tips we have covered. If you want to share your personal experiences and tips, please comment below.
Massive thanks for watching and thank you for sticking till the end. Please do share, like, and subscribe to support our channel. This is the Traveling Thief and we'll see you in our next episode.